What up, HyperChange? Welcome to another episode. Today we're doing a preview of Tesla's Q2 2018 earnings. They are set to be announced next week. This is the once every 3 months quarterly bonanza where Tesla releases their shareholder letter. They go through their financials. The quarterly conference call happens right after. So for this episode, I'm going to go into what I'm expecting Tesla to report on their income statement and then a little bit more analysis on the quarter. So let's get right into it. So Tesla recently announced their Q2 deliveries. They were a little over 40,000 cars. This was up, almost 100% year over year from deliveries of a little over 20,000 in Q2 2017. So this is the most important number of Tesla's business, and we already know because they report it how many cars are sold. So this makes it a little bit easier to extrapolate the financial results. Here are Tesla's quarterly financials dating back to 2016. As you can see, the revenue growth trend has been incredibly strong, but at the same time, for the past 6 quarters, Tesla's been losing a lot of cash flow. And so that is because they're investing in, service infrastructure. That's because they're investing in SG&A to build more stores, in R&D. The gross margins are really weak while they ramp Model 3. There's a ton of factors basically boiling down to the fact that Tesla is in ultra growth mode. And that is why they have been losing money. This quarter, I believe we're actually going to see the losses continue. So here's a little spreadsheet that I designed, basically trying to mock up what I think the Q2 2018 financials could be. Keep in mind, this is just a rough estimate. It's gonna be wrong. This is just me doing some back of the napkin math to try and guesstimate what I think is gonna happen. I broke down the revenue into the 4 different components: auto sales, leasing, energy, and services. So for Q2, the extrapolations here are very, very simple. I assume that automotive sales revenue, outright sales, would be flat in the quarter from Q1 18 with everything except for the incremental Model 3 deliveries. So Tesla delivered around 8,000 Model 3s in Q1 and delivered around 18,000 in Q2. So that's 10,000 more Model 3s. If we assume an average selling price of about $55,000 on those incremental 10,000 cars, that's an incremental $550 million in automotive sales revenue. So I added that to the 2.56 billion, and that's how I came up with 3.11 billion in sales revenue. I'm expecting lease revenue to stay flat. Not much to this other than the fact that they're not leasing any Model 3s. So I think the business should be about the same. With the energy business, I assume that it stays flat from Q1. There's a bunch going on here. The energy business included $75 million in Q1 revenue from the Australia project, which bumped up revenue significantly. I don't know if there'll be another big battery project that they realize. There isn't one that I know of. So I took out that 75 million in revenue. But on the flip side, Tesla's solar business is very seasonal because the sun shines more in Q2 than in Q1. So they're going to be generating more solar revenue. So I sort of think that evens out, the seasonality of increased solar evens out with that removed Australia battery project, and that's how I got flat energy revenue. Service revenue, I assume, goes up from about 260 million to about 300 million as they increase service and just the fleet of Model 3s continues to grow. Now, for gross margin, I assume that Tesla picks back up a little bit to 15%. This is based on comments from the last conference call where they expect gross margin to improve incrementally. So that gets me to COGS around 3.39 billion, 600 million in gross profit, minus 0.72 billion in SG&A, and 0.4 in R&D, and we get a loss of about 520 million. For those of you guys who are wondering, I did even extrapolate this to Q3, so I'm going to put this spreadsheet in the link so you guys can play with it yourselves and see what I'm expecting to Q3, but I basically plugged in the numbers that would have to make it so Tesla's profitable. The biggest assumption with Q3 is that their gross margin will continue to rebound significantly, and that will drive the leverage in the business model. So now let's get back to the charts. Visualizing these numbers, I'm projecting the 4 billion in revenue and about a loss of 500 million for Q2 2018. Once again, the growth is strong, but the losses continue. If we compare this to the previous Q2s for Tesla, you can see that revenue is going to be up about 43%, but once again, the loss more than doubles as they continue to invest and ramp. Now, the biggest thing happening with Tesla's business model that I will be watching in this report other than revenue is operating expense growth. As you can see, this has sort of hit a wall. Tesla's operating expenses are not growing, and this is really, really good because this is the leverage in the business model. If these expenses stay flat while the sales increase, all that incremental gross profit is going to drop right to the bottom line. And if I added in what I'm expecting for Q2, and this is a significant bump from Q1 because I think they're going to have to include severance payments from all these employees that they laid off during the quarter. The good news is that Q3, I'm expecting to normalize and go down a little bit, and that will be a huge help to Tesla generating profits in Q3 is mitigating this OPEX growth. Now, if you take a look at the chart here, I'm expecting OPEX growth to accelerate next quarter or in Q2 to about 23% because of, once again, the severance from the layoffs, but next quarter, Q3, to go down to about 8% year-over-year growth. And if you chart that over revenue, you can see why this gets so exciting, because my expectations for revenue growth are accelerating while OPEX decelerates, and this is where the operating leverage and therefore potentially profitability in Tesla's business model is going to happen. Now, in terms of energy revenue, visualizing it here, I said that I'm expecting energy revenue to be flat, about 410 million, would still be tied for a record for Tesla's energy business ever, would be about 43% organic growth. Now, this is still very rough estimate up in the air, so we'll see what happens with those numbers. It is important to keep in mind that Tesla's energy gross margin was very, very weak in Q1, just 9% compared to 29% in Q1 2017. The reason being, in my opinion, was they sold that $75 million worth of revenue for the Australia battery project at break even or at a loss because they need to get it done within 100 days. I just think they were cramming to make that happen, and that really dragged down gross margins. So I'm expecting gross margins in the energy business to bounce back to around 15 or 20% this quarter, but that's just a total guess. That sort of wraps up what I'm thinking for the income statement. So what will I be looking for during the earnings and, the shareholder letter and the call? Another big number is, what is the cash balance? Tesla ended Q1 with 2.7 billion in cash, with all these rumors about them, trying to get money from suppliers, about them running out of money, about them going bankrupt. The real stat to watch here is how much cash is in the bank, because that's their cushion, and that will tell us how much they burned. So just a ton going on there, but cash balance is going to be one of the most important numbers I look for in that report. The next thing I'm going to be looking for is free cash flow. So this is basically, taking the cash flow from operations and CapEx, capital investments for the future, to seeing how much money the business lost. And so that number was about $1 billion last quarter, and this is the number that all the skeptics and the shorts point to. So I think if they can do better than $1 billion there, that's going to be a really good sign. Now, gross margin guidance. The biggest thing, remember what I said, for them to hit profitability in Q3 is I'm expecting gross margin needs to trend back up towards around 21% for the whole company. And they were only around 13.4% in Q1. So I need to see, a reaffirmation that they continue to believe gross margins will improve pretty significantly. The next thing I'm gonna be looking for is, are they reaffirming profitability in Q3 and Q4 of this year? This is something Elon Musk has, said time and time again, and the company put in their last shareholder letter. They believe they can be GAAP profitable and cash flow positive in the third and fourth quarter. So, that's right around the corner. I'm gonna be looking for them to confirm that that is still on track. And then the last thing that I'm gonna be looking for in this quarter is just any update on Model 3 production. I mean, the last time we got an official word from the company, they had just produced about 5,000 Model 3s in a week, along with 2,000 Model S and X. So it'll be really interesting to see whether they've been able to sustain that 5,000 a week rate, whether they're slightly below it or above it, or just any commentary about the Model 3 ramp will be super, super important. And just at a high level, my 30-second breakdown of what I'm expecting this quarter is record revenue, huge losses, huge negative cash flow, as they finally make this last mega investment quarter to get Model 3 production capacity up. And so I think this is going to be a bloodbath of a quarter. I'm expecting that. Everyone who's done their homework should be expecting losses in the hundreds of millions of dollars, but this is all going to get better from here. Q3 is the next quarter. That's when Tesla said they're going to be profitable. I think they're going to be able to pull it off. I just think it's really important to keep in mind when you read this report that it's going to look ugly. It's going to be a shitty quarter because they're still ramping, and all focused is going to be on whether they are making the right progress for Q3, because that's really the quarter that matters, that will shut up the haters. So I don't know. I'm stoked for the quarterly earnings report. I'm going to have an update soon about how I'm going to try and get on the conference call, if that's happening or not. So definitely stay tuned there. Would love to know what you guys think in the comments below. What are your estimates for Tesla? I'm here with $4 billion in revenue and negative 520 million of EBIT. Would love, put your guesses in the comments. If you guys are closer than me, like maybe I'll give you a shout out or something. Anyway, if you like HyperChange, please check out our Patreon page. Consider supporting there. Hugely appreciative of all the people who have currently pledged their support. Anyway, this is HyperChange. I'll see you guys next time. Peace.